Hey, Matt the Mortgage Guy here, and I'm smiling because I'm going to bring to you some of the worst mortgage advice you might ever hear. Now, this is meant to be somewhat entertaining, but unfortunately, some people actually believe this horrible mortgage advice. So as soon as you smash that like button, I'll get into it and tell you about the worst mortgage advice you should never, ever listen to. All right, first and foremost, bad piece of mortgage advice. Don't bother with a pre-approval. I feel like I've already beaten this one up on plenty of prior videos, but just for this video, I'll tell you, a pre-approval is gonna really benefit you as a consumer just in case there's something on your credit you don't know about, or your income gets calculated in a way that you don't really understand how lenders look at it, but they look at it because of how it's variable or because of how you get paid, bonus structure, something like that. You don't actually qualify for what you're trying to buy. You get in 3 weeks and figure out you don't qualify for your dream home, that can be a disaster, not only financially, but probably emotionally. So, second piece of bad mortgage advice, get your mortgage from the bank you bank at. Now, I don't do a lot of big bank bashing, and I really try to avoid talking down on anybody at all, but you don't want to just look at the bank you bank at. In a lot of cases, not all, big banks can handle a lot of things like deposits and car loans and business banking very well, but not necessarily be the best spot for a mortgage. There's independent mortgage brokers who all day, every day, all we do is mortgage. We do it really well. We've got plenty of different options. So based on your scenario, we might be able to offer you a loan that's light years better than what the big bank is offering. So that's all I'll say about that. Another piece of bad advice, which leads to this question being asked by a consumer, is what's the max I qualify for? The piece of bad advice would be go ahead and buy up to the max amount you qualify for. So you're doing great, you've got a good job, you've got little debt, and you qualify for a $650,000 purchase with 5% down. That's all fine and dandy, but when you get pre-approved, what you should be looking at is what that translates to in a mortgage payment. Now, if you already know, because you've rented for 7 years and you've had this job for the last 5, you know what a comfortable monthly payment is. You can take into account that you're gonna save a little bit on your taxes when you write off your mortgage interest. You can take into account that you plan to see some raises in the future, but don't stretch yourself so much just because you qualify. Because to be completely honest, for somebody who has very little debt, they're gonna qualify for more mortgage than I personally think, or most people think, is healthy or good. And so don't go out there and get into a $4,000 a month mortgage just because you qualify for it. Think about what you want to do with a monthly payment and how you want to live your life. You want to be able to travel, you want to be able to do other stuff besides just sit in the house and watch Netflix. So, final piece of bad advice is always go for the lowest interest rate. This is another one I've hit on in multiple videos. I feel like the information's out there, but people still are really easy to fool. And I know they're easy to fool because the same companies keep doing the same stuff. They flash 1.99, 2.125, 2.25% interest rate. They send out mailers. And trust me, I've gotten client after client after client. Look at what they're offering me. I'm pre-approved for this 2.25%. Well, I'm sorry to inform you, Susie Q, that that piece of mail you got, 1, is blasted off to everybody, and 2, has an itsy bitsy little fine print that says 2.25% interest rate cost you $7,800 or $9,300 or $10,800 in points to get that rate. Not only do you pay that number of points, but it's 780 credit score, 60% loan to value. It's something that 95% of people aren't going to fit in that bucket anyway. If they fit in that bucket, they still wouldn't want that crappy mortgage paying 2% upfront. Most people are going to want a rate that's closer to what we consider par, which is zero cost, 0 points. So that's enough. These 4 pieces of bad mortgage advice hopefully helped you out. When you hear them, you've seen that, you're not going to fall for that. Any questions at all regarding mortgage, I'm happy to help. Matt, M-A-T-T, at mattthemortgageguy.com. Licensed mortgage broker in California. Happy to assist. If you're outside of California, feel free to send me a message. I'm happy to help you out, even though I don't lend in your state. Thank you for watching, and if you enjoy this kind of straightforward, honest content, please consider subscribing to the channel. I'm trying to grow this thing to the biggest mortgage YouTube channel the universe has ever seen. Not really, but sounded cool.